UR Bhat, Managing Director at Dalton Capital Advisors, joins us on the show. What a difference 20 days can make, Mr. Bhat, or 20 trading sessions, if not 20 days.
Yeah.
But we are kissing distance of new highs, I mean, whatever, 400, 450 points.
Yeah.
But it's been a strong rebound from the 1900 levels.
Absolutely. I mean, given the fact that internationally things are not exactly in great shape with the trade wars sort of playing out, with the summit, the US-North Korea summit, just some days away, and there could be any outcome there, and then Brexit and the problems we have in Middle East. I think the temperature there is going up. So all these can contribute to, and FIs continue to be selling. So all this, despite all this, the market has really shot up quite a lot, and just about 4% away from all-time highs. So I think there is a lot of sort of steam based on domestic factors. Inflation is under some control, except for the foreign trade problems that we have. Other than that, domestically things look okay. There is a lot of economic activity. All the indicators seem to be suggesting that things are getting to be better. Quarterly results, of course, the first few results are always good. So they have come, but now we have to see how this shapes up.
But if the yields are to be believed, Mr. Bhat, there is a higher probability of interest rate hardening or not softening at all. Does that worry you?
Well, I think that is factored in. This is not exactly news. So I think with the US interest rates nearing 3%, so therefore I don't see any reason why here domestic interest rates would be softened. It'll, if anything, harden. So I think that is more or less factored in, but I think the government is taking some action with the FIs being allowed the short end of the market, of the debt market. I think that might actually cool temperatures a bit.
Mr. Bhat, I wanted to take that point forward. We've seen a good recovery of almost closer to 700 points now, but FIs have been absent from here. They've been continuing, they continue to sell in the cash segment. Do you think if this trend continues, it can be a sign of worry because we're in for a lot of volatility? We've got now state elections lined up this year.
Well, I think, you see, the sort of selling that we've seen over the last few days or last few weeks, in fact, that I think can be absorbed by domestic inflows, domestic institutional inflows. Do you
see that trend continuing? Will they? Because that was the trend last year also that we witnessed.
I think domestic institutional flows would be of this order.
Okay.
They can absorb, probably less than $1 billion of FII outflows every month. But more than that, I think if it is double or triple that, then I think there is certainly going to be issues. But as of now, I think the selling is not very, very robust.
Right.
So therefore, I think that is getting absorbed. As far as domestic institutional inflows are concerned, I think that they continue to be reasonably okay, even though they have sort of softened a bit. But I don't think they're really gone the other way. So I think things are in reasonable equilibrium as of now. But I think something can give any time.
Well, they've been selling in the debt market as well. I think FIs for the month of April have sold nearly 10,000 to 11,000 crore in the debt market.
Also March.
Yes, also March, yes. And that's, I think that worry of rising crude prices, even rupee has been depreciating. But let's shift focus and talk about the earnings, Mr. Bhat. The biggie Reliance Industries, which came out with the numbers. Some bit of disappointment, but the brokerages do maintain their, bullish stance on it. What have you made of the numbers there?
Well, I can't really talk of specific stocks. So, but generally, I think the market was probably expecting better results than this.
Okay, you're not going to talk stock specific. Okay, so I'm going to talk about the oil and gas space where the crude oil prices have been inching higher. How should one play this space now? The oil marketing companies are on one side, and you've got the upstream companies.
Upstream companies, I think they would continue to do well. Oil marketing companies, they have been able to pass on price increases till now, except probably for the last few days. And post May 12th, I think that also should happen. So I don't think that's a big issue. I think they would continue to do very well. I mean, both on the production side as also on the distribution side. I think they would continue to do well.
Okay. Now, I was looking at companies which certainly seem to be doing well. From the small cap end, the jute companies continue to rise and shine. I don't know if the plastic ban in Maharashtra leads to that, and Darshan was tweeting about it. But Mr. Bhat, pockets which are hitting new highs consistently, very strong moves, not just today, but they've been doing this for a while now. And Midcap IT features there. Mindtree is at 1100, NIT Tech 1200, a couple of other names doing well, KPIT Tech 251. There has been a phenomenal rally in Midcap IT.
Yeah.
Does the commentary and the earnings that these stocks have come out with give you confidence that the rallies could continue and the valuation multiples can sustain?
Well, I think it's largely because of the rupee weakness. The market immediately takes a view that exporters should do well. But I think the pricing is always factoring all these rupee depreciation. But pricing adjustments don't happen every now and then. So it happens probably once in a year or twice a year. So till then, I think there is certainly some amount of upside on account of that. That is what is factored in current prices. But generally, if you really see the mid-size IT companies are doing better in the market than the large ones, except probably the biggest one. But so generally, I think there is certainly some space that is being created for specialist sort of IT companies, which are not the generic variety that you see the big ones. So I think they have carved niches for themselves, and they might actually continue to do better than the large ones, because sustaining that growth momentum with that large base is proving to be difficult for the big guys.
Okay. The other set of companies which have started to move up, Mr. Bhat, are the SFB stroke microfinance companies, Ujjivan, Equitas. The numbers seemed reasonably okay. They're coming off of bombed out valuation levels as well. Is there merit in trying to own these names? I mean, did you like what the companies have done over the last couple of quarters?
Well, I think their conversion into banks, I think they've handled that very well.
Okay.
So I think that continues to be a source of some strength. Their capability of managing the transition well. And generally the public sector banks are in doldrums. So therefore, I think there is a lot of business out there for everybody other than the public sector banks who have capital, who have some management depth. I think they can capture this market, and they are also profiting from that. But I think they particularly suffer from issues when elections come up about loan waivers and stuff like that. That affects them a bit more, because they are in the hinterlands and they are largely in the small ticket businesses. That's where I think the credit culture gets hit once there is talk of loan waivers. So I think that is some risk that you have to always be mindful of. But otherwise, I think they've given a reasonably good account of themselves.
Okay, that's the view coming in on the NBFC as well as the banking space. Just pull up Som Distilleries. The numbers come out today. And remember Pioneer Distilleries, the counter which has been locked in upper circuit for the last two trading sessions on Thursday and Friday. Once again today, it's shown an uptick of nearly 9% in trade. Well, Mr. Bhat, there is some traction which is now being seen in liquor space. There is some interest which is going back after, I think the Q3 numbers were a dampener after a good Q2. But are you looking at this space closely?
I couldn't hear which was
the liquor space.
Well, I think that's a space which a lot of people seem to be very keen to hold.
A lot of buying of late has been seen in
indeed,
stocks like Pioneer Distilleries or be it Radico Khaitan as well.
So this is a consumer space that's always going to be interesting, I think. But this is one space where one has to be always mindful of government intervention, because these are all sort of policy-led interventions are possible. So therefore, one has to be mindful of that. But otherwise, I think they are in a good space, and there is a lot of consumer demand. This culture of drinking is catching up. So therefore, I think they continue to do well.
Looks like you're not a liquor fan.
I am not a liquor fan, certainly not. But the point is that that consumer is really sort of giving it a leg up. But I think at some stage you can always see that there is some policy intervention every now and then. So one needs to be mindful of that.
Okay, that's a pertinent point. The other space, Mr. Bhat, which is doing well of late, is the specialized retail space. And what I'm trying to say is that the future retails of the world are not hitting those highs, but Avenue Supermart is, KDDL, which houses that Ethos book, is, Shoppers Stop. The numbers were slightly off, but the Amazon tie-up could do wonders to them. V-Mart or Vishal Retail, whatever you call it, also trying to do reasonably okay. What are your thoughts here on this retail space? Are there winners that can be created from here on in the wake of Amazon and Flipkart doing what they are doing, or Amazon and Walmart doing what they are doing?
Well, I think there is certainly some space for the physical retail also. There is no doubt on that. But that, I think, is probably largely to do with things like apparel. But if it is the regular sort of items that one uses for daily consumption, that is something that is probably slowly shifting to the Amazons and to the Flipkarts of the world, or to the big baskets of the world. I think that is some transition that we have to see, because I think grocery is something where there is probably going to be much more of an impact from these guys. But apparel is something that I think that may continue to hold interest for the retailers who want to go and check the fitment and then buy it. So that I think is something, that distinction we have to make. But if you really see, most of these guys have not given a great account of themselves in terms of, say for example, the ones you mentioned, either the valuation is sky high, or otherwise they're not doing very well. So the ones who are doing reasonably well are untouchable as far as valuation goes. But the ones who are not doing well probably should not be buying them anyway. So that is, I think, the dilemma there in that space.
Interesting. My final question, Mr. Bhat, are you buying into PSU banks?
Too early, I think.
Too early?
Too early.
Valuation-wise or time-wise?
Both.
Both.
So what are you looking at? What are you looking to buy at currently?
Well, I think non-PSU bank financials continue to be doing, I mean, that is a source of some strength. Then auto companies continue to do well, even though there might be some surprises here and there quarter-over-quarter. Then you have, the consumer space looks interesting. Industrials continue to do very well, especially with the GDP growth continuing to, probably expecting to show a leg up. So, I mean, these are the spaces where I think one can find reasonable value if you have to really be invested in equities. It's not compulsory that you have to be at 4% off the all-time highs with all the risk involved. It's not something that you have to be compulsorily there.
Okay, sane advice. Mr. Bhat, thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Pleasure. Thank you.